Right guys, so just looking ahead to the key events and themes this week, let's start off with the euro. We do have the ECB in the spotlight this week at their rate decision and press conference. The sole focus, just to cut to the chase, will be on Draghi's press conference, particularly surrounding the euro strength and what that means for tapering. Well, heading into this, we've seen a variety of reports suggesting that the ECB are growing more uncomfortable with the rate in which the euro is rising at the moment, and the fact that that's going to potentially hamper their next moves in terms of monetary policy decisions, and that could actually slow them down from tapering. As we know, markets had priced that in pretty much for after the summer at around September, October time, but that does seem very unlikely at the moment, just given the recent rhetoric that we have seen. On the back of those reports last week, we did see the euro come off well away from those highs that were printed there, the closing of the gap of 2015. What I would say is, in terms of this specifically, if he mentions anything negative related to the rise of euro strength, then officially watch out for the euro really retreating and pulling away, potentially with eyeing as low as 116 and even further to come south. If he literally just notes that the euro has been strengthening, just acknowledges it without giving any negative rhetoric attached to that, then to be honest, that's enough for the markets to push the euro higher if he doesn't actually attach anything negative related to the economy to that. Looking over in Australia then, we do have the RBA rate decision. In terms of their policy, it has been on pause for quite some time now. The economy hasn't really warranted any change or shift at the moment. It's pretty much been a wait and see mode for the RBA. The most recent rhetoric from this central bank governor, he has indicated rates are more likely to go up than come lower, but that might be quite some time away. So pretty much, as I say, they're just in a wait and see mode for the time being. As we know, the economy cannot withstand any rate hikes for the time being. GDP lackluster, wages are very much subdued. That's a key issue for the country, and also inflation is well away from the central bank's target bank of 2 to 3% at the moment. In terms of the Australian dollar, it has been strengthening very gradually against the dollar. We're just shy of that 80 cents mark, and typically around this level it does make the central bank uncomfortable. So just be prepared for any potential talk down of the Aussie dollar. We did see that last time, but this could be a bit more firepower this time around to really shift that southwards for the central bank. Over in Canada then, the Bank of Canada do have their respective rate decision. This time around they expect to keep rates unchanged at 0.75% after the unexpected hike that shocked the markets, actually, where they hiked by 25 basis points at their last decision. If we look at the economy in Canada, they're actually one of the outperformers across the major economies, really. GDP, surprising pickup. We've seen over 7 months of consecutive growth on a monthly basis for Canada. The labour market's looking great. Inflation's creeping higher. Consumer spending is also a bit more buoyant, which is really good. So all favouring some Canadian dollar strength here. And if you look at their last meeting, the last central bank meeting, that hike wasn't just a typical hike. It was actually sort of covered with also a bit of hawkish tone to it. So do be prepared for them to potentially signal that another hike is imminent for the central bank, potentially as soon as next month. Very lastly, they're looking on the geopolitical front. As we know, the tensions have heightened even further between North Korea and the US, with Trump over the weekend with some commentary suggesting that he is going to be preparing military action with South Korea and also potential sanctions. In terms of specific details at the moment, still unclear, and nothing concrete has been set for the time being, but what we have seen is gaps in the market at the open, but particularly with strength really flowing to the Japanese yen. As we know, in unsettled times, that respective currency does strengthen. We're seeing gold pick up in terms of prices. What I would say is, it is really unlikely that we will see a war between North Korea and the US, but guys, just be very, very cautious with your trading over the next few weeks or so. Other than that, that's it from me. Have a smashing trading week. Thank you.